Ever contemplated the profits if you had invested $5,000 in Broadcom back in 2018? It's a tantalizing thought, isn't it? The reality is that by March 2024, that initial investment would have blossomed to a staggering $26,546. That's a jaw-dropping increase of 431%, or an annual growth of 40%. Now you might be wondering, how did Broadcom pull off such impressive growth? Well, that's what we're here to unravel. We'll be taking a deep dive into Broadcom's financial health and business performance, exploring the key factors that have contributed to this remarkable success story. We'll be looking at a variety of indicators, from revenue growth to profit margins, from cost structures to net profit. We'll also delve into the company's assets and how they have evolved over the years. Plus, we'll examine some key financial ratios to gauge Broadcom's liquidity and inventory management. But that's not all. We'll also be exploring Broadcom's operating cash flow and free cash flow and see how they've grown over the years. And finally, we'll conduct a DuPont Analysis, a powerful tool that breaks down return on equity into three components: net profit margin, asset turnover, and equity multiplier. This will give us a holistic view of Broadcom's financial performance. So, are you ready to delve into the world of Broadcom to understand the mechanics behind its financial growth and to see how it has leveraged its assets, managed its costs, and optimized its operations to deliver such incredible returns? Let's dive in and dissect Broadcom's financial health and business performance. This journey is not just about understanding Broadcom's past success, but also about gaining insights that could help you make informed investment decisions in the future. Remember, knowledge is power, and the more you understand about a company's financial performance, the better equipped you'll be to spot potential investment opportunities. So, buckle up and get ready for a fascinating exploration into the world of Broadcom. Let's dive in and dissect Broadcom's financial health and business performance. Broadcom's 2023 revenue stands at a substantial $35.8 billion. This impressive figure represents a steady rise from 2018, with the company demonstrating a compound annual growth rate, or CAGR, of 11%. Let's break it down year by year. Between 2018 and 2019, revenue growth was 9%. From 2019 to 2020, it was 6%. The following year, 2020 to 2021, saw a significant leap to 15%. Then, 2021 to 2022, growth peaked at 21% before moderating to 8% in the following year. Now, if we delve into the composition of this revenue, it's clear that products drove 78% of the total, with subscriptions and services making up the remaining 22%. Geographically, 67% came from the Asia-Pacific region, 23% from the Americas, and 10% from Europe, the Middle East, and Africa. Clearly, Broadcom has been steadily increasing its revenue over the years. Broadcom's profit margins are quite impressive. Let's take a closer look. In 2023, Broadcom's gross profit margin was a remarkable 69%. Now, compare this to the company's 5-year average, which was around 60%. That's a significant increase, showcasing the company's ability to generate profits from its sales. But the story doesn't end here. The net profit margin in the same year was 39%, again considerably higher than the 5-year average of 30%. This indicates that after accounting for all costs and expenses, Broadcom was able to retain 39% of each dollar of revenue as profit. Now let's shift our focus to the company's costs. Broadcom's expenditures as a proportion of its revenue in 2023 included 15% for research and development, 4% for sales, general and administrative expenses, and another 4% for amortization of goodwill. Interestingly, these proportions have been on a downward trend from 2018 to 2023, meaning the company is becoming more efficient in managing its costs. In a nutshell, Broadcom has been successful in improving its profitability and reducing its costs. It has managed to increase its profit margins while simultaneously decreasing its costs as a proportion of revenue. This is a testament to Broadcom's effective cost management strategies and its ability to drive profitability. Let's talk about Broadcom's net profit and assets. In 2023, the company's net profit was an impressive $14.1 billion. This represents a compound annual growth rate, or CAGR, of 3% from 2018. However, if we compare it with 2019, the CAGR shoots up to a whopping 51% annually. Broadcom's total assets in 2023 stood at $72.9 billion, which was slightly lower than the $73.2 billion in the previous year. The net assets, on the other hand, showed a positive trend. They increased from $23 billion in 2022 to $24 billion in 2023. One key ratio to note here is the equity to total assets ratio. This ratio gives us an idea about the financial leverage of the company. In 2023, this ratio was 33%, an improvement from the 31% in the previous year. This indicates that Broadcom has been able to grow its equity at a faster pace than its total assets, which is a good sign for investors. So, what does all this mean? Simply put, Broadcom has demonstrated a consistent growth in its net profits and assets over the past few years. This financial strength positions the company well for future growth and makes it an attractive option for investors. Broadcom has seen steady growth in its profits and assets. Broadcom's liquidity ratios and inventory management are noteworthy. As we delve into the financials, we find that the company's current ratio in 2023 stood at a solid 2.81, showing a positive uptick from the previous year's 2.61. This indicates that Broadcom had more than enough current assets to cover its short-term liabilities, thus having a strong liquidity position. In addition, the quick ratio, which is a more stringent measure of liquidity, also showed a favorable trend. In 2023, Broadcom's quick ratio was 2.55, an increase from 2.34 in 2022. This suggests that even without considering inventory, Broadcom had sufficient liquid assets to meet its immediate obligations. Now, let's turn our attention towards inventory management, another critical area for any business. For Broadcom, the inventory days in 2023 remained consistent at 62 days, the same as in 2022. This tells us that Broadcom, on average, held its inventory for about 2 months before selling it. A stable inventory days figure signifies that Broadcom has been able to maintain its efficiency in inventory management over the years. Similarly, the receivable days, which measures the average time it takes for Broadcom to collect payment after a sale has been made, was also steady. In 2023, the receivable days was at 32, slightly down from 33 in 2022. This slight decrease signals a faster collection period, which can contribute to improved cash flow. In conclusion, Broadcom's liquidity ratios and inventory management paint a picture of a company that is not only financially healthy, but also adept at managing its resources. It's this kind of financial robustness that makes Broadcom a compelling consideration for investors. Broadcom has maintained a strong liquidity position and efficient inventory management. Broadcom's cash flows and return on equity deserve a closer look. In the year 2023, Broadcom's operating cash flow, or OCF, registered at a substantial $18.1 billion. The free cash flow, or FCF, wasn't far behind, coming in at $17.6 billion. Comparing these figures with those of 2018, we can see a significant upward trend. The compound annual growth rate, or KGR, for both OCF and FCF averaged around 15% during this period. This is a strong indication of Broadcom's solid financial health and its ability to generate ample cash to fund operations, investments, and shareholder returns. Moving on to DuPont Analysis, this method breaks down return on equity, or ROE, into 3 components: net profit margin, asset turnover, and asset to equity. In 2023, Broadcom's ROE was an impressive 59%. The net profit margin, which measures how much of each dollar of revenue actually translates into profit, was a sturdy 39%. The asset turnover, a measure of how efficiently the company is using its assets to generate revenue, stood at 0.49. Lastly, the asset to equity ratio, which indicates the degree of financial leverage the company is using, was at 3.04. Comparing these metrics with those of the preceding year, we can see that Broadcom's ROE rose from 49% to 59%. This increase was primarily driven by an improvement in the net profit margin and a high asset to equity leverage. Broadcom's high return on equity comes mainly from its high net profit margin and high asset to equity leverage. This combination of strong cash flows and high ROE highlights Broadcom's robust financial performance and makes it a compelling study for investors. So, what does all this mean for potential investors? Well, Broadcom's impressive growth, robust profit margins, and strong cash flows suggest a strong financial performance. Its assets have been steadily increasing, while keeping costs under control. The high liquidity ratios indicate stability, and the DuPont Analysis highlights the company's effective use of its equity. This all points towards a promising future for Broadcom. Remember to subscribe for more company analyses and feel free to suggest which companies we should analyze next.